Thank you for joining us today. My name is Steve Wolfenbarger, and I'm the Education Manager for AHOA. Today's webinar will focus on solutions for the financing challenges hoteliers are facing as COVID-19 continues to impact every industry. We are pleased to have Peter Burke here, President of PMZ Realty Capital Hotel Finance Group, present on this crucial topic. Peter has been a longtime supporter of AHOA and has spoken at AHOA events prior. Now, before handing this over to Peter, I'd like to read this disclaimer for all those listening to this presentation. AHOA does not provide legal or business advice or representation to any individual persons or members. AHOA goes to great lengths to ensure the information it provides is accurate and useful, but strongly recommends all persons obtain professional advice and/or legal representation which is appropriate to their particular situation. Further, AHOA does not endorse any companies nor any of the products or services they offer. There will be a Q&A available at the end of the presentation. So for any questions you may have, please type them into the questions section. Take advantage of this opportunity to ask what is on your mind. Also, we will make today's presentation available for all within 48 hours on our COVID-19 resource page. We're excited to have you all here today, and with no further delay, I welcome Peter to begin.
Thank you very much, Steve, and I'd like to thank AHOA for inviting me, especially the board of AHOA and its officers. I know they've been working hard with the owners, and also the AHOA PAC has been working hard in Washington to come up with solutions, and there have been a lot of meetings with AHOA and Washington representatives to come up with industry-wide solutions. That's not the purpose of this call. This call is more on the granular level for how owners can interact with their lenders to keep them apprised of what's going on. And just before I get into it, into the kind of the meat of the presentation, I think we should all take a step back, just appreciate from this situation what a small world it is that we live in, and how all the owners, lenders, and franchise companies need to kind of pull together for the long-term success of our industry. We're all kind of in this together. 1 out of every 8 jobs is directly or indirectly related to the hospitality industry. So it's not just about the individuals on this call and the owners and the lenders. There's a lot of other people involved in what we do, from the people who clean our hotels, to the front desk people, to all the restaurants that we run, and on and on and on, and the hourly people who are also impacted. So this is crucial for our industry. So I'm going to get into some strategies that I've thought about interacting with the lenders. But before I do, our lawyers require us to read a disclaimer as well, just like AHOA. So bear with me for about 15 seconds while I read our disclaimer. PMZ Realty Capital LLC and its officers and directors do not warrant the accuracy, completeness, or usefulness of this information. Any reliance you place on such information is strictly at your own risk. PMZ Realty Capital LLC disclaims all liability and responsibility arising from any reliance placed on the presentation or its contents by you or any other listener or viewer. You should seek independent and expert advice regarding your financing questions. So that is our disclaimer. Our lawyers will thank me for reading that. And now let's get into it. So obviously the hotel business is hurting. Occupancy is down. It's nobody's fault from the hotels. We had, a black swan here in the form of a pandemic, something nobody could have forecast. But nonetheless, hotels reprice themselves every night, and we have to sell our rooms every night. And so we are the first impacted, which is painful. But remember, we're also the first to come out of it. So as soon as travel starts again, things tend to turn around pretty quickly. So what we do, PMZ, just a brief history, we're a New York-based financing intermediary. We finance about $800 million worth of hotels every year. The company and its partners have been in business since 2003. We're headquartered in New York, but we do transactions all across the country. So that's a little bit about the background of PMZ and the company that I work with and run. Two types of loans: portfolio loans and CMBS loans, or as some people call them, Wall Street loans. Portfolio loans are generally local or regional bank loans where you have a loan officer, they're in your local market, you go in and meet with them, they take you out to lunch, they're your friends, maybe they take you out golfing. And then CMBS loans or Wall Street loans, which are generally done by the investment banks that are sold off into a trust, and you deal with something called a servicer or a master servicer, and they're the people who collect your rent payments and stuff like that. Advantages to a CMBS loan: you're generally able to lock in a long-term interest rate for a period of 10 years, and it's non-recourse. So a lot of loans are CMBS loans, and portfolio lenders generally shorter term and are generally recourse. But the strategy for dealing with both of these types of situations is the same. And the theme of this presentation that I'm going to present is communication. Communicating with your lender what's going on with your particular hotel so there are no surprises. So my suggestion, and of course, consult with your attorney before doing anything, but my suggestion would be to put together a letter to explain to your lender, especially if it's a CMBS lender and you're just a loan number, you've probably never met them, so they understand who you are, something about your market and stuff. So I have identified 6 things that I would put in a letter that you could send to your CMBS lender or your servicer, it would be the master servicer, or to your portfolio lender. First thing, very simple, your property location and property ID number so they know who you are. Number 2, you might want to talk about your history of good payment. I've had this loan for 3 or 4 years. I've never missed a payment. I've been on time. My property is up to date with, Formula Blue or something like that, whatever the brand is. You might want to mention your good GSS and quality scores. We've always been in the green zone. We've never had any guest service scores. Pump it up a little bit so they understand what a good operator you are. You might want to list good things that are happening in your market. Hey, Amazon just opened a 400,000 square foot warehouse down the street from my hotel. General Motors is doing this. Whatever's going on in your local market, so they get kind of a feel of your market. You might want to talk about your star ranking. Hey, I'm always at 110% RevPAR penetration, or 105, or 130, or whatever it is, so they understand how you perform in terms of your competitive set. Although they already have all of this information because you probably send it in annually or semi-annually, but they don't review it unless generally there's a problem. But you might want to pump that up in a letter, a very nice letter, and to say, hey, this is who I am. This is my hotel. This is how it's performed. This is the market. Now I'd like to talk to you about, what's going on now. Up until February 15th, the hotel was doing great. Then this COVID-19 virus came along. It's not doing so great. So these are the steps I've taken. I've had 15 housekeepers. Now I only have 7. I've cut down the breakfast from, 5 choices. Now we're only doing grab-and-go breakfast. My front desk person, I've reduced their hours. And explain what you've done. And say, nevertheless, I still, am anticipating trouble ahead, and I just want to open the dialogue to work with you because I might need some relief down the road, possibly. Just to let them know what you're doing, who you are. And that's, it's too early to know exactly how the lenders are going to respond. But if you see problems coming down the road, I always think communication is the best way to go. I've gotten a lot of calls from existing clients over the last couple of days asking me, well, especially for CMBS lenders, what are they going to do? And the answer is nobody knows yet. It's way too early. What are the whispers that I'm hearing? I'm hearing that there might be something like an orderly moratorium of technical default. What does that mean? It means that the lenders won't put you in default for being late on your payment or not paying. I've heard that they might put people in forbearance for 3 months. I've heard that they might switch people to interest only. I've heard that they might defer some payments and put it on the back end. These are all rumors. I don't know this for sure. I wouldn't rely on it. But those are some of the things that I've heard that might be done. So we're all going to have to wait to see how this plays out over the next couple of weeks when the lenders actually come to a decision. Just from some experience back in 2008 and 2011, when I also was involved in the market and how lenders did, one of the biggest successes for people working out issues with lenders is coming to the lenders and presenting a two-way street. In other words, not going to the lender and saying, hey, I can't pay anymore. What can you do for me? It was always a much better discussion, and the results were always much better if you went to the lender and said, hey, I can't pay anymore, but look, this is what I want to do. I can switch to recourse. I love this property. I'm not going to give it up. I want to invest it. I'll pay down my loan by $250,000 if you have the ability to do that. I want this modification. Some sort of two-way street. So you're not just looking for something from the lender, but you're offering the lender something. It's early for that yet because we need to see what the lenders are going to offer. But I'm just giving you kind of a preview. If you're facing a workout down the road, what worked in the past, a two-way street. Also, what we saw from 2008 to 2011 is some of the SBA lenders offered up to 90% guarantees. And this goes in the rumor mill again. I know that there's talk in Washington, perhaps, about that coming in. What do those look like? Those are SBA loans that don't provide a cash out, but they're more like rescue loans that come in, rescue an existing loan, perhaps provide money for a cash out. Perhaps provide money for an FF&E renovation, and they get you out of your existing issues. Those loans are generally recourse, but again, the federal government provided 90% guarantees to those people, and we hear rumors that might come back. But again, down the road. So what do we do today? Today, I think we just communicate with our lender. Tell them what's going on. Keep everybody apprised of what the situation is. Tell them all the great things about your hotel, your company, so they understand you're a real player, you know your market, you're not going anywhere. And then, we'll all just have to wait to see how this plays out. Maybe we'll have another webinar call in 2 weeks or something like that when we get some more feedback from the servicers and the lenders. But this is all new. I mean, this is all within the last week or two. And I know that, some of the properties, some of the people I've spoken to, their occupancies are in the single digits or very low double digits. So it's alarming, and I understand it. So I would open up those lines of communication sooner rather than later, after consultation, of course, with your attorney. So that's what I have to say. Steve, do we have any questions?
All right. We haven't received any right now, but please type them in, everyone, so that we can start answering your questions. So just going back to what you were saying, Peter, right now you're not foreseeing them being able to renegotiate their rates at this time.
No, I don't. I think it's too early. I think it might come to that, their rate or their terms or forbearance where they don't have to pay their mortgage for a while. I think that's all possible. But again, we're only, 7 to 10 days into when the real hardship started. And remember, the lenders and servicers, they're people too. So they're not in their office meeting with the committees. They're housebound. So the communication between, them and the people that they need to liaise with internally isn't great. So we just need this needs to germinate a little more till we have more information. That's why I just say communication, sending a registered letter, just going, on record with the lender and saying, hey, here I am. This is the problem I'm having. You're my lender. I want to have a happy relationship with you, and let's figure something out. And so when they finally do come to some sort of solution, that they'll look favorably upon you.
Perfect. Peter, we did get a request for you to repeat your 6 points again.
Sure. Number one, kind of obvious, but I would mention your property location and unique ID number for your property, especially if it's a loan. It would be your loan number. Number two, your history of good payment. Number three, GSS and quality scores. Number four, the list of good things in your market. And that's when I had mentioned the Amazon was moving into your market, or any new demand generators that are coming into your market, or maybe a college is expanding, something like that. Number five, your star ranking. Maybe you're 105% of RevPAR penetration, something like that. And number six is just, an honest, we'd like to start communication with you. Tell them what's happening at your property. Again, they get all this information anyway, but you might want to tell them.
We have the questions have opened, so we're getting several in now, Peter. So the first one is it better to foreclose and get a servicer to renegotiate the loan terms?
It's better to foreclose. Well, it goes from the master servicer, who you're going to be dealing with initially. The master servicer is the one who, it's like KeyBank or Wells Fargo, the one who collects all the rent and the FF&E and stuff like that. When the property goes into default, it goes to the special servicer. And I'm sure some people have dealt with the special servicer. That's someone like, L&R or Square Mile or one of those people. So no, I would not recommend that. Again, I would recommend communicating with your servicer. Going into default is never a good thing, especially, you'll speak to your lawyer when you go into default. Generally bad things happen, like default interest, which raises up your interest rate, and maybe other things happen depending on what your specific loan documents are. So no, I would not recommend that. I would communicate with your, again, through your attorney. I would communicate with your lender exactly what's happening and not try and play hardball. That's not my style anyway.
Excellent. This person wants to know, with the Feds cutting interbank rates to almost zero, they want to know how they're able to take advantage of this, either with their existing lender or possibly a new lender.
Right, and that's an excellent question, whoever asked that. I think the Fed cutting rates will be like rocket fuel to our business, and you will definitely be able to take advantage with low rates. However, right now, as we're sitting here on Wednesday, March 18th, most lenders are nervous about lending into the sector just because there's uncertainty, and lenders don't like uncertainty. They don't know if this virus situation is going to last 30 days, 60 days. If they knew that certainty, they would be able to underwrite. They can underwrite around that. We can underwrite around anything. But with all of that uncertainty now, there's just not a lot of appetite to make new loans. Once that uncertainty passes, and that uncertainty could be there's a leveling off in cases like we've seen in China and South Korea. It could mean there's a new antiviral that works, a lot of different things. You'll probably know it because all of a sudden the stock market will level off and start to recover some of the losses. But once we start to see one of those elements, I think lenders will start to lend again. And then what the person mentioned, the fact that the Fed lowered interfunds rate to almost zero, will absolutely take effect. I mean, look, before this crisis happened, we were having this call 4 weeks ago in the middle to the beginning of February. Rates were 3.5% to 3.75%. Unbelievably historic cheap interest rates. Now we're a point and a half less on the Fed funds rate. So I think when, my crystal ball says that when lending starts up, rates are going to be in the 3 to 3.5% range. But we have to wait for that to happen. And for that to happen, we have to wait for lenders to get some comfort that we're beyond the current situation.
Peter, this one, I'm not sure if you'll be able to answer, but I'll go ahead and ask just in case.
Okay.
This person said that they heard the SBA 504 were disclosed 6 months deferral program. What is the criteria to qualify and what documents are needed?
I have not heard that. It could very well be true, but nobody has mentioned that to me, and I do not know the answer to that question. So that's, but I'd be suspect that that is true, because I would think that information would have made its way to us because we do lots of loans, especially for hotels. So that might fall into, when I was talking before about the rumor mill area of things that are possible, like when I talked about the 90% loan guarantee on the SBA loans. But I don't think that that's true yet. Could be wrong, but I have not heard that.
Okay, and that's perfectly fine. This person says, if there are restrictions and no social contact for more than 3 months, what will the lenders do?
Good question. I mean, the answer is they'll have to figure out something to work. Again, that goes into, we've only been in this 7 to 10 days. Will there'll be some sort of orderly moratorium on debt service payments, some forbearance, something like that. But we need feedback from them, and I'm sure they're discussing it. Just along with, that's kind of like the other question the gentleman asked, for the 6 months on the 6-month moratorium on payments for the SBA loans. All of that's possible, and some combination of all of that is probable, but we just don't know yet. It's too early. I would just communicate with my lender what's going on with my hotel, so they know, and maintain that good relationship. Whether it's your local or regional lender, your portfolio lender that you probably know them, or your servicer.
Great. This person mentioned that you said to contact your attorney, and they said that they don't have one. Who do you recommend, or what type of attorney do you recommend for them to go out to?
Right. Well, certainly an attorney that has experience. Depends. If it's a local or regional bank, there's generally a local attorney who has what I call just a general real estate experience attorney who can help you. If it's a securitized loan or a CMBS loan, you should definitely use an attorney who has commercial mortgage-backed security experience, and one with hotel experience is especially useful because these are generally tri-party agreements because you're the borrower, there's the lender. And remember, the other person involved in this relationship is the franchise company. So we all have to keep them in mind because the loan has to work in coordination with the franchise agreement. And there's a bunch of attorneys who do that. And if they email you, Steve, afterwards, or they email me, I can give them a couple of suggestions of attorneys that we've dealt with in the past who are specialists in that area.
Excellent. This person is wanting you to go into your crystal ball, and they want to know, how long do you think this challenging time is going to last before we get back to business, regular business?
Right. So the Peter Burke crystal ball, I think that things will start to edge back to normal. In other words, airline travel will pick up, which is obviously critical for hotels, and people will start to travel sometime after Memorial Day. I think the drumbeat of bad news is going to get worse, consistently worse and consecutively worse over the next 4 to 5 weeks, just because we have more testing. So I don't think the actual sickness is any worse, but the fact that we're testing more, we're going to be every week's going to be 2,000 cases, then 10,000 cases, then 50,000. It's just going to sound like it's getting worse, just because we have a lot more testing capacity, and that's going to keep people socially isolated up until Memorial Day. I think it's going to level off after then. Plus, everybody being in their houses for 6 to 8 weeks, there's going to be a lot of people itching to get out and start to do the things that they want to do. The weather's going to be getting warmer. It's the summer. And I think things will start to get somewhat back to normal in early June. And then remember, there's also going to be a lot of pent-up demand. So on the loan area, we're a hotel finance intermediary. We arrange hotel loans. We're anticipating a very busy third and fourth quarter with, number one, historically low interest rates, as the gentleman mentioned before, 0% Fed funds rate, and also with demand turning back. We're thinking by August or September, we'll have 2 or 3 months of new demand. Lenders will be able to underwrite the loan, which is critical for how we analyze things. We'll be through the tunnel, even though there'll still be sickness in the world. We'll be through the tunnel and be able to underwrite hotels and kind of getting back to business and what all of us do every day. That's my crystal ball. I hope I'm right.
Let's see. This person would like to know. They said, "What if you were forced to shut down operations? If your franchisor has agreed to allow you to shut down, would you shut down first before informing your lender, or seek lender's consent?"
Speak to your attorney.
Okay. This person said that the FDIC put out a statement on March 13th relaxing standards for loans and to work with clients. I've communicated this to the banks. How do you think the banks will respond to it?
Yeah, hopefully well. You got to remember that all of us on this call, we're hoteliers. We're in the hospitality business in one form or another. But it's not just the hospitality business that lenders lend on. They lend on, retail, apartments, self-storage, and on and on and on. So we're in this boat, but the guy who owns, a shopping center where all of his tenants are dark because either nobody's shopping there or the state has told people not to travel has the same issues. So I think what the FDIC was saying was more of a general comment for banks and other types of lenders to work with their clients that lenders would do anyway. Look, lenders, no lender wants to foreclose on all this commercial real estate because, they'd be closing on hotels and every other thing. The last thing a lender wants to do is own the real estate. What they want to do is the lender makes a loan for a fixed interest rate. They want their interest and they want to get paid back at the end of their interest period, and then they want to make another loan. That's it. If they foreclose on a property and end up owning a hotel or a shopping center and an apartment building, they've done something wrong. So that's not the MO of, I don't think, any lenders. So they will work with you, depending on the situation. We just don't know how yet because it's too early. And I think what the FDIC was saying is just, be open, which they would have anyway. So I'm not sure what the statement actually means, other than to make the market feel good. I think that was more of a political statement than anything else.
What are your thoughts on closing a construction loan in the next 30 days?
Again, this is my personal thought, but if I had a construction lender and I could close a construction loan and they're not, the lender's not backing out or retrading terms or anything, I would absolutely close, because by the time you open your hotel in, 12 to 15 months when you're done, this virus should be long behind us, and you should be opening into a strong market. So my personal feeling is if the lender will close, go for it. You're not closing a construction loan in March and opening your hotel in April. You're going to open in the middle of 2021, and we should be in a strong market by then.
Great, thank you. Peter, we have several questions, and we're coming up to the 30-minute point. I just want to verify you're okay with us continuing?
Sure, I have time for a few more questions.
Perfect, thank you. This person wants to know, with my non-recourse loan, will the bank work with me in this time of crisis for an extension of my mortgage payment?
Good question. And again, that goes into we've only been into this 7 to 10 days. The rumor is that they're going to offer some sort of moratorium. In other words, perhaps you don't have to pay for a couple of months, perhaps an interest-only period, perhaps you defer payments and they add the principal payment onto the back end of the loan. Those are all rumors. We don't know yet. My guess is that one size doesn't fit all. In other words, because they do something for hotel owner A, they might do something different from hotel owner B, depending on who the person is, what the leverage level of the asset is, what the payment history is. There's lots of different factors that go into these loans. And I'm sure the services are all talking about that, but we're just too early to know, what the menu of possibilities are. And again, it'll differ for each individual, but I can't those are things that people did before the last recession. Those are the things that I hear people talking about. I have not heard of anybody actually securing anything yet, because again, we're a week or two into it. So stay tuned.
Okay. This person wants to know, if a hotelier is in an adjustable SBA 7A loan but wants to refinance into a fixed program, do you know if the SBA will allow them to refinance and with another SBA loan?
I don't know the answer to that question. I don't think the SBA requirements have changed yet. I think they will, to react to what's going on in the market. So whatever the rules were before, I would think still apply. But for that particular change in an SBA loan, I'm not sure what the answer is.
This person said that they just opened a new hotel 3 months ago. Congratulations. But they want to know, how do they approach the bank if they don't have any historical data at this time?
How do they approach the bank? Well, I mean, the loan, obviously came from somebody, whether it's a local, a regional bank, or a securitized lender. The same as if they've had their loan for 5 years. Hey, this is who I am. I just opened the hotel. I built it for, $15 million, and I got a loan from you of $12 million. I have $3 million of equity in it. This is my market. I own 5 other hotels in the market. It's one of the top brands. And just explain who they are, and they want to, they want to work with the lender and figure this all out.
Okay. Next question is, when lenders are back in financing mode for hotel acquisitions, how do you anticipate lenders' underwriting will change? And also, there was a second part to this. What do you anticipate LTVs to adjust to?
Right. So the conversations we've had with lenders about how they're going to underwrite hotels, because generally we underwrite hotels based on the trailing 12, is that they're going to substitute, assuming that there's a recovery of sorts that starts in Memorial Day, like my crystal ball says. What I've heard that lenders are thinking about doing is substituting 2019 months in the trailing 12 for the bad 2020 months. So in other words, if we looked at a trailing 12 through the end of August for March, April, May 2020, we would substitute 2019 months and use the trailing 12 that way. So it's basically a hybrid trailing 12 with 9 months of real trailing 12 and then 3 months from the 2019, and then doing their DSCR and debt yields off of that. And then the second part of the question, we do loans up to 70 on acquisitions. we do loans up to 70% of the total, including the PIP. So if you buy a hotel for 8 and there's a $2 million PIP, so the total project is 10 million, we would do a loan of 7 million in that case. And the underwriting for the trailing 12, again, would come off of a hybrid of both.
Thanks, Peter. This one, I'm not sure if you're going to be able to answer. I apologize. I'm not knowledgeable enough to know if this is okay to ask in public. So they said they had already stated with the lender. They started communications with their lender, and their response back was to get an SBA assistance for COVID. They said, we had a BK11 filed earlier in 2011 crisis, so we cannot qualify. What should we do if a lender doesn't work with us?
The answer is there. It sounds like a workout, but that's something they should contact their lawyer, and a lawyer who perhaps has experience with workouts.
Okay. We've gotten a couple questions asked for independent small hoteliers, and they don't have the big name brands to help them. Any suggestions for them?
Yeah, well, the small independents aren't securitized loans. They're generally their local banks who make those loans because they're smaller loan balances. And yeah, go talk to your local banker. Probably somebody that you know their first name and last name that you met with, and discuss what's going on. And a lot of the same metrics that you would do with a securitized loan. Tell them, how good that before February came along, how well your hotel was doing, how much you invested in your hotel. For a small hotel, I spent $100,000, just give an example, $100,000 on new PTAC units, renovated my lobby last year for $40,000. This hotel's been in my family for 2 generations, and, build a story that you've invested in your hotel. It's your life. And, and you want to work with them through what is, the most challenging business climate that any of us have ever seen and probably ever will see. Again, communication is key. I think what you shouldn't do in general is just do nothing and just keep quiet and all of a sudden, wait, for a call from the lender from 6 weeks and said, hey, I didn't get your debt service payment. What's going on? Don't you know, I closed my hotel 4 weeks ago. And then a surprise. Surprises, in my opinion, are never good. Generally in life, they're not good, and especially when it comes to this type of stuff.
We have time for one last question. This person asked, can this be a good time to refinance and pay penalties on a CMBC loan? Is that CMBS?
CMBS, yeah.
Yeah, okay. Sorry. I know enough to be dangerous, Peter.
Not yet, because the CMBS market is kind of dry right now because they're waiting to see what happens. But if the caller wants to do that in August, things we're going to be starting will be somewhat back to normal in my crystal ball. I think it's a perfect time because I don't know what the interest rate is of the that they're paying now, but I think they'll be able to secure historically low rates again with the Fed funds rate at 0. I think that hotel rates are going to be 3.5%. Being able to lock that in for 10 years with 30-year amortization is a great thing. By the way, if anybody wants to, sorry, go ahead.
No, go ahead.
Yeah, no, I was going to say, if anybody wants to, I have a feeling we're going to wrap up soon. If anybody wants to email me directly, my email address is Berk, BERK, at PMZ, P as in Peter, M as in Michael, Z as in Zebra, capital CAPITAL ahoa.com. And I'm happy to talk to anybody, obviously in a purely confidential basis, about your specific issue or problem or question or whatever. As Steve said at the outset of the call, we've worked with AHOA and AHOA members forever. I've done a lot of loans for HP Rama, who is actually our first AHOA client. So anything that we can do on our end to help you, please think of us as a resource.
Excellent. Peter, with that, that is all the questions we have time for. So we want to thank you and PMZ Realty Capital for this really informative webinar, and it's so timely right now. So we truly appreciate that. We want to also thank everyone that joined us today. We will be sending this out tomorrow, and Peter's information is on here. So if you have any questions, please reach out to him. Feel free to check out our events calendar on the AHOA website for future webinars, and also in our resource library for any past webinars we have done. Have a wonderful day, everyone, and we hope to see you all join us for future webinars and AHOA events. Thank you.
Thank you. Thanks, Steve.
Thank you.